Well, the US dollar has been a safe haven for investors amid the cratering bond market and government shutdown fears. And we rely on the Fed to keep the value of the dollar high. Here is what former Vice President Mike Pence had to say about how the Fed is playing that role.
I would absolutely go in a different direction with the chairman of the Federal Reserve. Fresh leadership at the Fed. We ought to focus Federal Reserve on protecting the integrity of the dollar.
So let's bring in our very own Jared Blickery here. So Jared, what are we seeing right now in the currency market?
We've seen a strengthening dollar, and I'll just go on the record here saying it's really not the Federal Reserve's purview to enact a strong dollar policy. They have to worry about employment and inflation, and if a strong dollar happens to support that, well, I would think they would too. But let's go to the Wi-Fi Interactive, where we can chart the price action in the Dixie or the U.S. dollar index over the last 2 months, and you're going to see it's from the lower left to the upper right. That is a very strengthening move, and as we know, a strong dollar tends to weigh on the results of multinational corporations, but it also does have some benefits as well, especially when the country that holds a reserve status in the world also has their capital markets in tow. So let me just go to a chart that I prepared here that shows when the dollar is really surging high and when 10-year yields are surging. So the red dots are when the dollar is overbought, and this is laid over a chart of the S&P 500 going back 2 years. And then I have in blue dots when yields are overbought. And if they're both overbought at the same time on the same day, it's a purple dot. What I want you to notice is that most of these dots, most of the strong dollar is happening on the downstrokes. And this was especially prevalent last year. We got some on the little bitty upstrokes here, but for the most part, since we've had this rally off of the October lows, we don't have a lot of red or blue dots. That means that we haven't had to deal with a surging yield market or a surging dollar market. But that has changed. You can see recently a bunch of red dots there. That means the dollar has been getting a little bit overbought. And when it moves too quickly, it's not about the levels, it's really about the speed of the movement. That kind of rattles risk markets because institutions that have to move around large amounts of money and manage them, well, they can't deal with volatility as easily as a retail investor. So back to the main point, here's the US dollar index again over the last 2 months, but I want to show you over the last year because essentially it was trading sideways for most of this time, and it only recently broke to the upside. And given the consolidation here, the length of the consolidation, I got to think that it's going to head materially higher unless there's a huge change in circumstances here. I want to close by showing a heat map of the US dollar index versus all the crosses around the world. Well, not all of them, but most of them. This is on a 1-month basis, and all the green means that the US dollar has strengthened over the last month against these various currencies. In the upper left, we have the Turkish lira. The US dollar is up 5.2%. Then we have the Mexican peso. Then we have the British pound. Then we have the Swiss franc, the euro, the Japanese yen. So this is a really interesting mix of not only developing market currencies, but also developed market currencies. And it just goes to show you the strength in play here. The US dollar will rise not only because of safe haven values, but also because of interest rate differentials. And that's what we're dealing with right here. The higher for longer, people want to buy dollars so they can invest in our yields, which are surging higher. So it's kind of a virtuous loop there. Some would say not so virtuous. Depends on which side of the trade you're on.
Jared Blickery, can always count on you for a bit of a lesson, history lesson, I should say, in the dollar. Thanks so much for that.